Insights. I'm Eric. Thanks for joining us this week. We're going to talk about coffee again here, not so much because coffee has something to say. It's just one of the better performers inside the evolution of the trade, and it's moving along, and there's not much focus on it. Everyone's focusing on other markets, stocks, crypto, grain market. Coffee is quietly doing its thing, and we're watching this number grow here. Not too long ago, the primary trend flipped 6 months ago, but not too long ago, this went from a negative number to 15% pretty quickly within the span of the week. And we're going to talk about why this is probably going to continue higher. We're going to go quick brush through this. I'm going to leave this one open since there's no resets and there's nothing being given away. Subscribers already probably bought coffee's reset and energy build and probably bought its flip. So they're going to give you a few things that everyone's going to be taking a look at, and we're going to go from there. So let's dig into the chart. If we go up here, we can see the bar chart here. Everything looks like we're heading for congestion. If you use the reversal tab and you isolate coffee, which is Joe, you're going to get the daily, weekly, and monthly reversals, or what the computer calls gaps. These are not necessarily gaps that you can see in the chart. The computer studies the volume and it establishes a minimum gap within that, and it creates these supply demand zones. I pulled that chart forward here. We're going to focus, this is the daily, weekly, and monthly. We're going to focus on the weekly and monthly. Daily has a lot of information in it, and unless you're trading shorter term, which is something that the evolution of the trade really doesn't support. It supports following the primary trend and buying resets. I tend to ignore this unless I'm trying to get out of a position or trying to buy or know when something short term is going to happen. But really, we're looking at these zones right here. Here's the price of Joe, which is the ETN that tracks. It buys a little bit of the front month, mostly the second and third months of the contract out in order to avoid some of the temporary closing or rollover problems that contracts have. It's a fairly decent way to track a continuous contract for coffee, and it's traded under the ticker JO. You can see that the reversal gaps inside above are resistance, and those are below are support, and this is for the weekly and this is for the monthly here. If I pull some of these forward, we can see prices here. These two bands right here create this heavy congestion zone, which is where coffee struggled with, and then these zones down below here, and then you can put probably more. It defines where the support. So this is as long as Joe stays above this zone, everything looks pretty good. If it climbs above this tight congestion band, we're going to go quickly into an air pocket, and we get an idea of where those air pockets lie. The computer calculates them on a daily basis. They don't jump around too much in the weekly and the monthly, and we can see that air pockets are going to once it clears this, we're probably going to move up to the next zone, and you can see them here, you can see them here, and you can get an idea. I will probably do another subscription update when this climbs above and jumps the creek again. Right now we're still below that. We're in the process of jumping the layers of supply and demand. Ultimately, we'll get above this one, and it'll lead to much faster conditions. Faster conditions will lead to markup, and that's when, I've said before, we've made a lot of money quickly here from a negative to a 15% return. That will probably pick up if we jump the creek, and that's an if. We'll have to see what happens, and I'd keep an eye on that. If you're a trader or if you're following the evolution of the trade, which is right here, if you're a subscriber, click this. Make sure you're a master of the evolution of the trade. Click these links, watch the video, read up about it. It will all start to make more sense for you. Let's talk about the evolution of the trade specifically in terms of the 3 time frames right now. The primary trend is 6 months. This is the price, and these are the time cycles for the primary trend only. They're still negative, which means there's a lot of time, so this is an early move. The weekly's starting to pick up where things are turning blue, which is a warning that we're above the mean a bit. It's not a warning that it's time to get out. Coffee is still relatively early, and I can show you that in a second why. The daily's starting to move. We're at 1 here, and we're still, but everything's still blue, which means that we haven't reached the early warning stages yet. Again, these cycles can go 2, 3, 4 standard deviations or more. They will turn red. They will be bolded. They're warnings. They're warnings that you would want to take profits. The biggest measure of how you want to take profits, kind of de-escalate the reset that you bought, or resets or escalations. They're marked here with R's and highlighted yellow. If you want to de-escalate or pare back some of that, and we want to always keep our core position, in the evolution of the trade, we keep the core position until this either gets old, the primary trend gets old, or it flips down. And we're not there, and we're probably a long way from that, considering that 6 months is not even the mean cycle yet. This could go many months, years in duration. So I wouldn't overestimate the amount of activity that you have to do in order to make profits. Time is time is the money maker in the primary trend. Going back to the composite trend, let's take a look. Like I said, everything is relatively early. But when you want to find out where the position, which this trend is currently in triple up, the alignment of the 3 time frames, daily, weekly, monthly being the most important, daily being the least. This cycle score is now mid, which means the composite, and this is the important number right here, the X bar, which is the average cycle score for the entire, for coffee, considers all 3 time frames, price and time, is slightly above its mean at 0.29. The computer then designates this as a mid-cycle. Again, mid-cycle is not something that you just want to jump in, but that's not what we're doing here. Really what we're doing is we're waiting for a reset. When this resets, you'll get a reset either in the daily time frame, which will go down and then back up. It'll reset, or this will go down and send the weekly down and back, and they will both go back up to up. So the daily will go down, weekly will go down, then they'll turn back up. This will reset back to up. This will reset back to up. The more the time frames reset, the lower the cycle score is going to be. The more this will be designated as early. But for now, this is mid. It's a watch. It's not like a warning or anything. It's an understanding that the composite cycle score is in mid-cycle. You can make a lot of money waiting, following time on a mid-cycle trend. This will flip till late when this gets above 1. These readings rarely go above 2 for the composite cycle score for the entire. And examples would be as the grain markets. As the grain markets probably rally further into the spring here and maybe even to the summer, their numbers will reach and probably go 2 or higher, which would then ultimately be a warning that you probably want to take profits off it. They're already a late cycle already, but these numbers rarely go above 2. So the movement between where we're at 0.29 and 2 is still a long way to go. It takes a lot of work to move this up even to 1 standard deviation. This is probably, in terms of coffee, it's probably a good month-long rally, an impressive rally that will take this number a lot higher. So it takes a lot of work to move this. So keep an eye on this, and we could try and frame that into the seasonality, which is over here, but I'm not going to talk about that because this is open content. Subscribers, download your matrix, look at it, look for points of which coffee is weak in the months that it's weak, and this is where the rally might go into. Before then, you want to take profits. Again, it's not something that we're going to just let it hang out there. You will get good enough to read this on your own, but I will update it for us when it comes, because there's not a lot of updates inside the matrix. The matrix only recognizes decent markets. Coffee is one of those, but there's not many decent markets. I mean, the world focuses on other things, but it focuses on hot markets that you should be, you know, many miles away from and not even be interested in. But that's how the world works. The world doesn't care about coffee because it's not hot enough, but we do because we follow the invisible hand, and that's how you make money. You don't make money by following the herd or, mainstream media. They're daily and a dollar short. They only talk about things after the move's over. sucks you in and sets you up for the hammer, but you avoid the hammer by doing your own homework. And the matrix provides that because it allows us to do our own homework. So let's go back to the bar chart. We know where the reversal zones are. We know where support. We know where it's going to jump the creek. We know when it's going to break the ice. Inside the blog under Q&A, there's a whole a section under cycle of accumulation and distribution. If you're new, go to there into the blog and read that. Become familiar with markup, markdown, jumping the creek, breaking the ice. That's what markets do. And this is where the support and resistance zones fall in. These are not, notice they are not in the zones that mark the highs. The computer doesn't care about that. It's following volume. It's a complex calculation, but you will find that when it gets through these congestion zones, it'll start to, it hits an air pocket and it screams to the next one. That's how it works. I can't stress that enough. Subscribers quickly learn that, and anyone who's new to here will quickly learn it as well. Down below here, before I end this review, is the coffee's Pro Index. That's located in this side of the matrix right here. I would check it once in a while. What you want, this is the Pro Index, this is the price of Joe, this is the public index. What we're looking for is we're looking for a confirmation of the rally of relative new highs. Now, price broke above this high, broke above this high right here. We see the Pro Index just broke above this high, so it's starting to confirm this portion of the rally. And we're looking to see if the Pro Index will continue to do that as we go up. If it starts to roll over and fade, it tells us the pros are selling. That's usually an initial sign of weakness, and we frame that within the diffusion index, which is the DI, or within energy. Energy is right here, and for now, energy is dropping. As price goes up, energy is dropping. That's distribution, that's normal. But these numbers are not big enough to create a blocking dome to slow this. So we could get into another air pocket, which another air pocket is probably good for another 5 or 10%. I don't know. You can go look at the numbers here to calculate what you would get. I mean, I'm not going to go over all that. That's more of a detailed review for restricted content, not for open content. But if we get to another air pocket, that number is going to go up. That next air pocket could create a DI reading that finally generates a blocking dome that stops this. So that's the evolution of the trade. That's composite trend, and that's the 3 time frames. If you're interested in, this is just coffee. There's all sorts of markets that are blocked out here and taken out, but you do the same analysis for all of them. This discipline, which I call the evolution of the trade, is the same for all markets inside the matrix. The logic applies, the same use of energy, the same tracking of the daily, weekly, monthly time frames. If you have any questions, contact me directly through the blog. There'll be some links below the video to get you back over there, or you can leave some comments under the video. I know a lot of people aren't trading coffee, so I don't expect a lot of viewing of this. I know it's much more popular to trade the grain market right now, but it's quite possible that coffee will outproduce them all over the near term. Grain markets are getting a little bit tired, but that's how it goes. I mean, you try and encourage people to follow coffee and to watch this video, but if they come in late, it's better to learn than to never learn. So if you have any questions, let me know. If you like these types of stuff, subscribe to the channel, like the video. I know a lot of people are kind of just mute or get lost or don't even want to participate within that, and that's okay with me. But if you do, you can do that as well, or you can contact me directly through the blog's email. So not keep an eye on coffee and keep an open mind, because it could get interesting. So we'll talk to you guys later.